Aotearoa, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news Trump's tariffs are bringing the same level of global uncertainty back as we had from China's pandemic. This time, however, officials in charge lack the credibility or the instinct to change policy for the common good, or the courage to withstand the nutters. In fact, the nutters are in charge of this latest mess. However, their tariff policy took a jerk overnight, with the US announcing a 1-month delay to the start of them against goods from Mexico. Meanwhile, Canada released a list of products that they will hit with counter tariffs for US. Probably more important, there is widespread evidence Canadians are already boycotting US products, tariffs or not. That will have a more immediate impact than official actions. But the effects have yet to show up in the data, and there was a lot of PMI data out today for surveys that predated the tariff news. The ISM factory PMI for the US rose to a modest expansion in January from a downwardly revised small contraction in December. This was a better result than expected, and the first expansion in the factory sector by this survey after 26 consecutive months of contraction. New orders increased at a faster pace, and that drove the change. Separately, the globally benchmarked S&P Market Factory PMI came in with a similar recovery recorded, and slightly better than the ISM one. In Canada, their factory expansion slowed slightly in January, but it is still at a level higher than either of the US surveys. Although the internationally benchmarked China Kaizen factory PMI slipped to a no expansion, no contraction state in January, the underlying data did feature a rise in new orders. Prices eased, and at their fastest pace since July 2023. Looking ahead will be difficult now, given the unknowable impacts of the impending tariff war. And the Singapore manufacturing PMI for January slipped to a marginal expansion, but it was the 17th consecutive month of expansion there, even if it was the weakest in 3 months. Slower increases were recorded in new orders, new exports, factory output, and employment. EU inflation in January rose marginally to 2.5% from 2.4% in December. What is interesting about this is that it was the first where energy prices weren't the restraining factor they were in 2024. But it is the 3.9% rise in services cost that is keeping this elevated. EU PMIs were contracting for their large economies, but expanding in the smaller ones. Overall, the contraction was less in January than December. And the S&P Global Australia Manufacturing PMI was revised higher to 50.2 in January from a flash 49.8 and compared to 47.8 in December. It's their first expansion in the manufacturing sector in a year as output returned to growth. New orders fell at a softer rate and employment levels increased, supporting the clearance of backlogged work. And retail sales in Australia fell by 0.1% in December from November, the first such retreat in 9 months, although the drop was milder than the forecasted 0.7% contraction. This result points to weakening consumer spending, fueling expectations the RBA may start cutting interest rates at their February 18th meeting. Year on year, retail sales only rose 3%, barely more than inflation's 2.5%. And staying in Australia, building consent levels were essentially unchanged in December from November to be more than 12% higher than in the same month in 2023. For all of 2024, they rose 4.7%. Despite those gains, the powerful construction lobby is calling for a $12 billion injection into infrastructure to have the taxpayer subsidise its activities. And CoreLogic reported that Australian house prices and sales activity were weaker than usual in January. They had a minus 0.2% price dip in January, the same as December, and the fourth consecutive monthly decline. Annual price growth has continued to slow, dropping below 4% now. The US Treasury 10-year yield is now at 4.52% and down 2 basis points from this time yesterday. And the price of gold will start today at $2,817 an ounce, up $18 from yesterday and back at a record high. And oil prices are virtually unchanged again, at just on $72.50 a barrel in the US, while international Brent price is now just on $75.50 a barrel, and also holding. And the Kiwi dollar is now at 56 US cents and down 40 basis points from this time yesterday. It fell 60 basis points lower than that during the day, but recovered some of that. Against the Aussie, we're down 20 basis points at 90.5 Australian cents. Against the euro, we're down 10 basis points at 54.3 euro cents. That all means our trade-weighted index starts today at just on 66.7 and down 50 basis points from yesterday. And the Bitcoin price starts today at $98,885 and up a minus 0.8% from yesterday. Volatility over the past 24 hours has been high, though, at plus or minus 3.9%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.